The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Tuesday. We're almost wrapping up the month of June. We've got the 28th of June at 10:06. Dow's up 215 at 31,652. Now this is very interesting. For my subscribers to my opening call, I was so reluctant today to add a bunch of stocks, fresh stocks, rather than to add to positions we've taken off with really good gains. We've taken off some. I wanted to add some back, but only on a sharp decline. And the thing about this particular move right now is, look, the Dow spiked all the way to 31,885. It's down 200 points from that high, but it's still up 190 points at 31,626. The spectacular action on Friday, here's the Friday candle in the Dow. There's the left side chart. That's daily, weekly in the middle, monthly on the right. Look at this. There's been a single leg A up in the S&P, but this has gone to a peak A, stalled at the 9-period moving average for just a moment, and then went up to this leg B, and it's gone from 29,653, over 2,000 points, over 2,200 points to the upside since Friday a week ago. So one of the things that I've been saying to subscribers is speed is of the essence. Therefore, you either manage to get, as we were very fortunate to do, manage to get pretty much at the lows of the different indices that we were buying. But once it starts to move up, this is the phase that's so difficult to enter. Why? Because let's just say you didn't enter yesterday, and the Dow or the S&P or Q's item or whatever it is, IWM, and you waited and waited. And then yesterday you said, okay, and then there was the pullback, and then it ran again. And then you said, I can't do this. I've just got to get in. So today you said, all right, I have to get in. And you got in, and the Dow opens at 31,594, screams over 300 points higher, and now it's only up 184. But this is still an incredible leg to the upside. That's why I'm saying this is the most difficult phase. Why? Because without that cushion of buying towards the low, it means that you whip. Now what you've done is the entry point that you had at 31,549, you're up a little bit, but now you're kind of feeling vulnerable. However, the best way to do it, and this is what I said to subscribers a couple of days ago, is if you've missed the move, then wait for an entry point where you can start a little bit saying, I know that this could be the day's high, but my real number is, and then make a number, because if you decide that there is a move that's occurred over the last week and a half that is strong enough to see higher highs, and in the Dow, I've got the Chapman Wave falling axe declining trend line that says two things. One is the Chapman Wave inside wedge target resistance line. We almost went to this dashed green line today. We just missed it, but it says tomorrow that level resistance will be 32,090, and it keeps moving up until you get to, and I'm going to do this now. I don't like messy charts, and let me just do this and show you what I am thinking about. This would be the red line, or pink. I usually make it pink when it's a Chapman Wave inside track repellent zone, and this I'll make green. And you can see this will be the area, the biggest area. Maybe we have, after all of this, all we do is we go to a leg B. Look, the previous one failed at a leg A at 33,272 after running up 1,600 or almost 2,000 points from the 30,635 low of the 20th of May. They just keep doing that. The difference here is that there is a much broader move to the upside. That's number one. And number two, the rotation through the different sectors is unfolding even as we speak, even as there's this pullback as we're looking at it right now. There's certain sectors that I consider really important that are actually holding very well, and some are actually rallying even as the market is pulling back. That's what I wanted to see. That's what we are seeing. And that says to me, don't ignore the fact that the oversold condition was so excessive that some kind of relief rally in price and time is far more likely than just a rally pop up and failure. Got that out the way. Now I'll get to the 120-minute chart in a moment, and the 10-minute chart, but let's just do this. So the S&P, so the Dow is up 0.61%, but it's starting to find some kind of support at the 31,630 level. So that's number one. Number two is in the S&P, this is just a single leg A up. The move that occurred from the 36.87 low of the 17th of June sprang to the upside in 2 bars after a beautiful doji candle, a reversal candle. I love that. That was what we were anticipating could happen, but we're using other techniques to go long on that Friday of the low in the Dow. But the S&P went to 3801.79 on the 22nd, and the next day it just squeaked to 3802.58 to extend that leg A. And since then, this is the first, so I'm just guessing that maybe today there's some kind of a pullback, and maybe tomorrow, because of the Fed speak and all that, we don't make a higher high than today's 39.45.86 level. If that is the high of the day, we don't know. But I'm saying maybe we finally get a peak A. Now there's a chance that we can make that technique that I use, that I call the Chapman wave single leg A up failure pattern. That means for whatever reason, you usually find it, say on a 1-minute chart, that at 8:30 in the morning there's a news event on a Thursday or Friday or something like that, and there's a spike to the upside at 8:30, but at 8:37 it's given back almost all the gains. It's like an Eiffel Tower, straight up, straight down, like an uppercase A failure pattern. However, this is going to be very important because for the first time, look at the oversold level in the stochastic on the blue line right here in the weekly chart of the S&P. Look at the V-shaped pattern. Look at the stochastic. It went just under 20%, not even to the teens, not even to the single digits, but to the teens in the weekly chart. And look at the histogram of the MACD. So far, all that I can say is that the daily chart is, you cannot turn the corner until you get the shortest time frame turning. You're not going to turn with the biggest time frame. It has to be the shortest time frame. So the 120-minute chart gave one signal. I haven't done the notation. Yep, I have. So that's E/F/B. So I've had, because the stochastic still at 88%, I'm giving it the benefit of the doubt in the 120-minute chart. I'm calling it an F/B. The technicals are still very strong. If we can, the high today is 39.45. If we can get to the 39.63 level anytime this week, then my target will be 39.92, the 200-period exponential moving average in the S&P based on the 120-minute chart. So that's gave a beautiful turn to the upside. It helped the daily rally. The rally in the daily is filled in one of the big gaps. That big gap going to the 4,000s, that is a real tough one. But this is a start. Let's go to the QQQ as we're about to go to our break. Oops, don't type here. QQQ, there we go. 1, 2, 3.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Question came in. Basil, could you show us the charts like you did yesterday that are most current, that you're favoring? Well, first of all, there's a pattern that I always talk about, three basic patterns: straight up, straight down, single line. Number one. Number two is a cup formation. Number three is an arch formation, or a combination of 1 and 2 and 1 and 3. This is 1 and 3 where you come down sharply. You make an arch formation. Looks like a lowercase h, and then it turns down. Most importantly, what I am looking at here is that the arch usually fails at a peak A or a B and takes out the left side low, and then it can go quite a bit low. It could even go 1-to-1 from the arch high to the base, and 1-to-1 to the downside. Or you're looking at the Y formation. What happens when it retests the top of the inverted Y? It's green because if it really powers through it, that can keep going. But if it stalls, you've got yourself a double top. You have to assess the vertical line down to see how the technicals are faring. And look at this. Here we are. We made a double top right here in the 1 minute E-mini chart. There it is. How strong the technicals are. Look how weak they are at that peak B, which became a peak B minus because it made the what? The dreaded H pattern, that lowercase h, took out the left side low, didn't just make a 1-to-1 to the downside, it made another little arch formation right here. I don't like to draw them all in because it just becomes messy, but I will here as a demonstration. That's a peak A minus because it failed, and it comes all the way down, and now we've got a third one. And what happened? The 200-period moving average, which was such an important resistance line until that big breakout at 9:30, spiraled to the upside to a peak E in the Chapman wave. Remember, the Chapman wave, we're always looking for from an identifiable low bar. You count each successively higher peak. You alphabetize them sequentially, uppercase all the way to A, B, C, D, E, F, G on the way up to 7 higher peaks, lowercase on the way down. But it's a buy signal that goes to a buy mode, upgrades it so that it at least goes to a peak D. It's a peak D where other things can happen. It can recycle to the upside, but wait a minute, look what happened. It went to peak D and quickly made an E, and then it failed. Then it made the arch formation, and the 200-period moving average, which was fantastic support as it took off like a rocket all the way to the 39.50 round number high in the E-mini, all of a sudden becomes a failure pattern on the third dreaded H pattern. Here it is. I drew it in before it even happened. Look, there it is. And now we've taken it out. So that means it's a B minus. Remember, I said a dreaded H failure pattern invariably happens at a peak A or a B, becomes an A minus or a B minus because it takes out the left side low. And here we are. Now we're only up 12 in the E-mini, and that 200-period moving average of 39.26 becomes really a difficult resistance level. Not only that, you've got the 9, which is pink, because look what happened as soon as it crossed negative, it went pink, and it's still pink. And look what happened here. You know my rule of thumb for the rectangle formation? A rectangle formation can last a lot longer than your patience, but if it does spiral to the upside, invariably it goes to a peak D. If it pulls back and then takes out a halfway point of the rectangle formation, be careful, because it could quite easily come down to the low part of the grid, that is the base. And what is that level? 39.08 is the level that we'll be looking at. The 200-period moving average, which is exactly at the base level that was made at 3:50 this morning, 10 to 4 this morning, on the 22nd. Sorry, on the 22nd. And that number is 39.08.00. All right, so I hope that helps you. Those are techniques that we discuss all the time. It should take you to at least a peak D. It could go quickly to an E, even an F. And then when you get the technicals fading, be careful. And that's the 10-minute bar and the E-mini. And that's why I said to subscribers, I don't want to do anything today. I had some screamers, stocks under $10 that I wanted to put in. I just decided, I even took off one in a broker, one of the brokers, because I said, you know what? It could rally today, but I just don't want the risk. We didn't get it at the low that I wanted yesterday, and I'm just going to hold off. We've got such fantastic positions. I don't want to get in the way of those positions by suddenly having losses that I'm not ready for. I'm ready for losses on the add tos, on the little bits that we've taken off when I want to put them back lower down. That's something different. So I am looking at, and tomorrow's Fed day, so whatever happens today, tomorrow you might see a little queasiness as we await the Fed. But this fact that the Dow moves so quickly to the upside in such a manner has all the ingredients of a takeoff phase in the daily that needs to help the weekly chart. This is not a takeoff phase like that we've got on the 23rd of March when we went along 2023, or any of the other times that we've gone along almost at the low or at the low of the Dow. This is something different. This is within the context of a lot of negative action that can precipitate some serious, very sharp 3 to 5 day declines. That's all I'm saying. All right. So within that context, now let's. I had a question. Could I look at some of these stocks? Yes, FANG. FANG is Diamondback Energy. It made a leg F in the monthly chart. We've got another couple of days to go before we wrap up the month. It is a peak D doji candle in the weekly, and the daily has gone to peak E at 162. Yeah, 162.24 on the 8th of June, and it comes tumbling. Look at these dreaded H's. H boom, lower low, and now it's at a big spike off the 200-period exponential moving average, which is tested out of 6 sessions. It's tested it 4 times, and now it's had a nice spring to the upside, up 4.7%. I think it's in play in the longer term, because oil, I don't see us having a resolution there. But that doesn't mean to say that these stocks that have had such a spectacular move. What was the other one you asked me about? Was it Devon Energy? Was it you that asked? No, it was Oxy. But Devon Energy went to a doji candle at about 79 something, just under 80%. Did it hit 80 round number high? No, it went to 79.40 on the 9th of June, and it came tumbling down. Trough A, trough B, trough C, right on the 200-period moving average. Now is having a bounce, but the weekly chart, I'm calling this an F. There's no other way. I think that these are in for a digestive phase, and some of them might make new highs, but I think a majority of them are just going to consolidate for quite a bit longer. This one had a beautiful cup, Chapman wave cup and ladle breakout to leg D. I explained this at the time. What happens is you often get a pullback, sharp pullback. It starts to make a cup formation, and then underneath it, where it failed, this was at a peak C, it still hasn't made the leg D. And then what happens is it pulls back, and then it makes a peak A underneath. It's usually gray, a gray leg B, peak B, a gray C, and then the latest peak C sees a spiral up above that C for leg D, and that D is so strong, it takes out the old leg peak C. So now you've got a combination. You've got an overlapping wave combination, and it's called the Chap Wave Cup and Ladle Breakout. One of my favorite patterns is what it does is it screams to a leg D, and then you've got to be careful because it can sometimes come back quite quickly to the breakout pattern. That's in the 45s, 46s, and here we are at 59. So I don't know if that's going to happen. That was I'm back at the Basil Chapter, which was our 1,152.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, so a question came in about Occidental Petroleum. Now this is very interesting. It has a different chart pattern to almost all the others. I'm not sure what the reason is. It didn't make a new, a multi-year high or even a major recovery high. It did make a yearly, certainly it broke above the Chapman Wave inside track resistance line. Now look at I love these patterns. Now, Larry Pesavento, and I believe Larry's voice is still not good, and I've just made a switch. I'm going to do the next hour again. I'll do that for Larry's hour. I know that I love it, and everyone I've spoken to says we love to have active action here in the Den and Tiger TFNN during the hour. Yes, it's great to hear the replays that people do. For instance, if I can't make it at my time, I'll do the 8 o'clock, 8 to 9. Steve Rose often does a great show, and then it's repeated. people like to do it live. I understand that very well. I'm able to do that. I might have to do some trading in the middle while I'm doing that, because that's normally a time that if I have any opportunity, I'll be using that. So this is a leg D. Remember the Chapman way, the objective is to get you to at least a peak D, going from an upgrade of a buy signal to a buy mode. We got an upgrade in the Dow from a buy signal to a buy mode. We haven't yet got it in the S&P, haven't got it in the Qs. The Dow seems to be the leader so far. So within that context, let me do a couple of things right here. So look at Occidental. It made a high. Let me pull this back. Yeah, it's made. Oh, I used to have these things all notated, but when my system suddenly shuts down and I'm not able to save, when I come back, this has been happening for 15 years or something here in TradeStation, and I have kind of figured out what to do, but I don't like to do it because at that time I'm trying to get back as quickly as possible. So I usually try to get back online, and I get back online. But what happens is somewhere, I haven't lost it. It goes to a different file, and I can never get that file back again unless I say, I want to, what is this thing here? TradeStation, backup restore. And that means I'm going to lose a couple of days worth of all this notation that I've done. And if I don't want to do it, I usually try to do it, but if I'm just saying, I got to get back, I've got the show and all that, I get back, and then I've lost that data to somewhere, and I have to start. It's like 3 months ago. Anything that I typed is gone. It's there somewhere, but the chart has come back with the latest. I don't quite understand it. They've never quite understood it at TradeStation. However, you can see we've got peak F and then a peak D going back to 2011 and 2013 and 14, and that means that Occidental Petroleum went up to almost 120 back in 2011, and its low was just recently, actually. The most recent low was in 2020, and that was a low at double bottom. This is the dreaded H successful one, although it made a lower low at $9 in March of 2020. Remember, that's when we went long, major long, the Dow. We still have some of those positions. But this one here, in October was at 8.52. It went to a lower low. That became a peak A, B, C, D. Now, I had done this, I know, a little while ago. The reason why I'm spending a little time on this, the reason why I mentioned Larry, is because this is a technique I developed years ago. And then Larry started talking about it, that one of his colleagues had developed this thing, the 135 pattern, 135, I didn't even know. But you know that I've done this ever since I've been here at TFNN. And it's nothing that I've kind of invented anything. It's just almost all the techniques I have is done by observation. I never went and said, I'm looking for 4 peaks. I called it initially the Chapman wave 7-wave form, because I found that at a peak D, things can happen. A, B, C, D. That's look, 1, 2, 3, 4, 5, 6, 7. That gets you to leg D. 8 becomes a peak D. So, and then I found when I had the major sell signal, when Fidelity became my first customer back in, my first institutional customer back in 1987, this summer, they had me on trial, and they said, okay. And then what happened is I had this Chapman wave methodology, and I used to hand chart, and I said, I've got a peak D at about, what was it, 27.39? I don't remember what it was. It was August the 17th or something of 1987. And then I said, I'm getting close to a sell signal, but I think I've found that I can actually go to higher peaks. So let's see what happens. Well, we went to a peak E, and I maybe an F, but I think at least an E. And then I said, sell signal. And that was, I had a hotline. I said to Fidelity, but there were others, but Fidelity was the major one. Sell signal. And that was, I think, the 22nd of August. I should know these things. I know those charts so well, but dates. I'm not like Larry. I don't remember that at 4 on a Thursday while we were having. And then John came along. It was 1971. It was a Thursday. I remember. Yeah, it was a Thursday, and we were at. I don't remember things like that. But this is the pattern that I noticed. I used to draw it in like this. I would say, hey, because I've always, with the patterns, I've always looked at the number of bars to the left and the number of bars to the right. Well, look at this match. This here says that Occidental has got the same kind of match. Now, I've done it in a very elaborate way, but normally what I would do is I'd grab a trend line like this, and I'd go from the top, and I'd go to the bottom, and I'd just grab it like that. I'd make it thick. I'd make it one color so that I know that I've got two separate things, because sometimes things blend in. And then I go down, and I'll make it red for this particular instance right here. Color, make it pink. And I put it above, and look. I mean, I didn't plan this. It was a question in the den. This is a monthly chart over 2013. Let's call it 2014. 2014 to the month of May of 2022. I would say 9 years. And look at this, to the exact number of bars on the left side to the number of bars from the doji candle, 2 doji candles, Chapman Wave silent doji plus the regular doji. And we came down to the exact, and that just says to me, hey, the MACD is good. The stochastics at 84%, that's great. You've got your double top in the on-balance volume. Let's watch this closely. And we're about to get a Chapman Wave Roman candle with 2 days to go. Anything can happen so far in the monthly chart of Oxy. I'm just saying, I know that oil prices can go a lot higher. I'm just looking at the chart and saying Occidental made a top at a peak D at 69 round number low. To top it off, I got a round number at the most recent high at 69 low on the day of the 31st of May. The high was 74.04, and that 69 round number has been really important because look how it kept fading. It went for 7 bars sideways, and it couldn't break decisively above it. You made your dreaded H at a peak B, and look what happened. So this is good rally, but there's a good chance that, yes, there could be nice rallies, but the major top for this particular phase in the daily, and I'm now going to say possibly the weekly chart, has to be considered as very, very important. That's all I'm saying. So questions about all of these oil-related. What about the oil service? What about Schlumberger? Well, Schlumberger made a peak E top, just at about 50, dropped to the 34s, trading at 37 now. Peak F in the week. I think that the whole oil sector, just for this particular phase right now, is allowing the Dow to move higher. Wait, let's look at jets. U.S. Airlines allows the chart, but it is up 54 cents today at 17.60. Basil Chapman, I'll be back. Dow's up 100%.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So let me just do this. So I comment in the Tiger YouTube. You're absolutely right, Jambalaya. There was a discussion about some of the techniques that I was demonstrating there. No other channel is doing this on YouTube. I'm forever grateful for TFNN basically saying TFNN is one of the channels, one of the few channels anywhere that's doing this live, giving you hosts with decades of experience, just throwing it out there after, look at this. Did I not say the rectangle formation can last a lot longer than your patience? Be careful when it breaks to a leg D and then goes to PD and then pulls back below the previous high, and that was the previous high, that peak F high of E-mini 37.75, because if it goes halfway into the rectangle formation, it can then go all the way to the base, and that base has supported the 200-period moving average of 3908. Where are we now? 3905. And these are techniques, and what did we talk about in the Chapman methodology? Peak D is where other things can happen. Wow. Is that a peak D or is that a peak D? So yes, absolutely, I agree with you, both Jambalaya and Vince, that here at TFNN, we give our all, because as far as I'm concerned, when I met Tom O'Brien, I had listened to him for a while. I remember even playing tennis out here at Newton North Tennis Courts with my friend, and I'd have my radio on while I was playing. At about 3 o'clock, we'd go out to play, and Tom O'Brien would have his show from New Hampshire, and I'd listen to the show. It used to have Tim Ord, he had a couple of people that he used to interview. I loved the show, and I'd been in business a long time. And when I met Tom, my partner at the time had just been asked by Fidelity to become a technician over at Fidelity. And so I had my own service for subscribers and institutions. And what happened was I went to meet Tom over in New Hampshire, and we were sitting there and we were chatting, and I had my laptop out and I set it up, and I've still got it to this day, a Verizon card that I could take it anywhere, and I had internet access everywhere I go. And we're talking, and he said, "What's going on there?" I said, "Well, let's just watch this. See that right now? I'm waiting for this particular peak, and at that point, I might get a sell signal." Anyway, we're talking away, and we're talking about, just different things about the market and other things like that. And then I said, "Okay, here it is. You see that peak F right there? That's where there should be the sharpest decline." And then we kept talking. I actually completely forgot about it. And then we looked, and there was a sharp pullback. It wasn't probably I don't know if it was a 1 minute chart, but it was in a very short-term time frame. And he looked and he said, "Wow, would you like to come and do this on TFNN?" I said, "Well, if it's educational, besides having a show and besides having my newsletter, I didn't know what I'd called it at the time, if it's an educational-based kind of format, absolutely. That's what I love to do. I was a professional musician and teacher. For a long time. I had a parallel career between the stock market and music. So I said yes. So education is, thank you. Yes, that's exactly what we're all about. I mean, when you listen to Tommy Jr. comes in, he had a fabulous thing. I didn't hear it in great detail because I was busy setting up my newsletter and all that stuff. But he was discussing options play. I mean, it just introduces you to a whole way of looking at fundamentals and technicals together and how you can trade these things. And then, of course, I come on with my show, Larry Pesavento. I don't have to tell any of you what Larry does. Just decades and decades of trading experience and just knows everyone in the business. And that's why many people listen to TFNN, because he introduces us to so many new techniques and people. And then, of course, Steve Rhodes had a great education from great teachers, and he just tells you everything he has to know. Dave White has his own unique experience using techniques that really are engineering or mathematically based. Love that. Just fabulous. And then Tom O'Brien. I mean, what can you say about Tom O'Brien? He's the person that I said, I remember years and years ago, I said, I don't know why we were talking about this. We had one of our meetings, there were a bunch of us, and I said, if ever I was in the Army and I needed a leader, someone who could just sniff out every single opportunity and every single hazardous thing that you could, Tom O'Brien's the man that I want in front of me. So we are, with his techniques and everything, his book, Timing the Trade. So we're just trying to give everything we can here at TFNN. All right, so what we've done is a series of dreaded H's, and I'd warned that I thought that today there's a chance that it is a little bit hazardous today, hazardous to your health and wealth, and let's be real careful, I said. We've got some entries that we want, but only on a sharp pullback. Maybe we're going to get some of them. Maybe we get some of them. We get stopped out. It doesn't matter because we're in at lows. It gives us a really good cushion. But this is telling us that at this particular time, and tell me, is a peak D, is that something that's worth learning about? Look at that peak D right there. This is also the Eiffel Tower. It's a pattern that I call the Eiffel Tower, where it goes straight up and then straight down. We were talking about that earlier, right? I didn't even think I'd be pointing to it right here. That's the Eiffel Tower. So I'm going to type in here the Eiffel Tower, IFFELTOWER, A, uppercase A pattern. It's a failure pattern. Look, there's the A right in there. Let me type in the A. Let me make it nice and big, and let me make it red, because that's exactly what it is. Let's go all the way to, let's go to 48. Font, style, red, and what do we have? We have the Eiffel Tower. I'm talking about Eiffel Tower. I haven't been to Paris for a very long time, and it really would be time to go to such a beautiful city. All right, so here we are. Eiffel Tower, straight up, straight down. I'll actually put it over there because that's the pattern you're looking at. All right, of course you don't get the cross beam unless you were doing the measurement, the measured move left side to the right side. In fact, I could even do that. Look, Chapman wave methodology. What do? I try to measure the left side. I look for the plumb line, the midpoint. I go right there. There's the bar, right? I make that green. I'll make it green in a moment. First, I'm gonna say new parallel. So I grab it and I put it over here, and I change this to green, and I'm going to expand this. And what do you have? An exact. Remember the what Larry called the 135. I just called it the measured move. We've got exactly the same thing here in a different format. Look, there it is. To the bar, to the exact bar, from the low in the 10-minute chart at 840 at 39.10.25 in the E-mini, E-mini, ESU 22, to the high of 940 at 3950.00, round number, to the low of this bar right here at 1040, which was at 3902.75. And we've even gone lower. So there it is. Look at that measured move. The exact number of bars to the upside with the exact number of bars to the downside. All right, we've got one break coming. And as I said, let me just double check. Maybe I missed, but I believe that Larry is still out. Yes, Larry's still out. So I'm going to do the hour. And there are a lot of things that I was asked about. Could I look at the crude oil? Could I look at heating oil? Let me make a note of that.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So in this last break, remember, here at TFNN, we're going to every like once or twice a year, TFNN has this fantastic thing, Tiger Dollars. This one is amazing. Tiger Dollars. I mean, if you're looking at the stock market to make money, I know that you're also looking to save money. So for all of you who are either subscribers to any of our newsletters, I'm now thinking, after a number of people have asked me, would I consider it? Maybe doing one of my all-day webinars, showing the different techniques, just as live, just as we did it right here. Look at this. There's nothing more live than this. Did anybody know that we would make a peak D in the rectangle formation? Did anybody know that it was D that we were looking at as a chance to have this pullback? Now the S&P is down 6 at 39,897. So you go to the front page, check it out. Just fabulous savings you can have on new subscriptions, old subscriptions. They never go away. Tiger Dollars, fantastic. So with that said, I'm going to be doing the next hour. That's Larry's hour. I can't say I'm doing the timing the trade. Whoops, I'm sorry. It's to trade what you see, but I will do it as close as I can to. I know that some of the aspects that Larry likes to look at, and certainly some of the areas that Larry goes to, and we'll try to do them live. I will look at USO. A question came up. I'm going to look at heating oil. I'm going to look at natural gas. We'll look at platinum. Of course, gold, silver. We'll do all the commodities. I also, my DBA, that's the DBA is the DBA Agricultural Fund that we've had from the 13s, hit the 23s. I'm looking at that and I'm saying, I wonder if the commodities are going to go even lower. That's going to be important in this particular phase. That's the reason why I thought there's a chance that the Dow could hold a gain for not just, I don't know, about a week or two. I'm just saying a really decent gain. We'll see what happens. I think right now we might be making some kind of a low. We'll talk about that. Yes, I want to talk about bonds, ride the wave. I want to go through the TLT, etc. I'll write it down as well. So I'll be back in a few moments. for the hour that Larry has. Larry, I just hope your voice gets back. We need you here. I can just see everybody saying, oh, no, Larry again today. And we got this guy filling in. Yep, I'll be filling in. So let's hold off, and we got a break coming up, and then I'm going to do the news, and then we'll be, I think we're making some kind of at least a tradable low right now, certainly in the 1 minute chart, having hit 38.95, and I'll do some live notations there as well. And I am thinking about doing a live webinar like I've done every year, a couple of times a year. I'll be back in a moment for the news, and then I'll do the 11 o'clock to 12 o'clock news show. Hope you can stay. Take care.